Inflation surges as more and more investors ride the wave. But what about September? You came here for the truth, so let me unveil that for you. Today I've got a very interesting video. First thing, I want to talk about September. I'm going to get into why that's very important. I'm also going to look at oil and gas. Of course, I got to talk about other commodities as well. I also want to look at what's happening with the drought and how this relates to the prices you are paying. You also must understand that when prices rise, it's much harder for them to come down. So we've got an issue here. I want to get into all of that and more. Let's begin. So let's get right into it. I'm not going to push this off to the side. I want you to know exactly what's happening, and you got to look at this, okay? It's from the Department of Labor, but Goldman Sachs putting together the chart, and you could see we expect an influx of labor supply from the over 14 million workers who will lose their federal unemployment benefits by early September, especially the 9 million currently not working at all. It's broken down over here, workers losing their federal unemployment benefits. It's just giving you an insight as to what's happening. But I wanted to show this to you because this right here is so key. This is the first thing about September that's really important. So we need to watch it. We need to pay attention to it. As of right now, you could say that there's nothing to worry about. But once we get into this time, we got to look at all the jobs. We got to look at how many people are employed, the labor force participation rate. All of these pieces of data have to come together. And we need to see that this is 14 million, especially 9 million workers that are affected by this directly and how that will impact the economy as a whole. Right now, you've got so many different things in place. We'll talk more about that in the Money GPS Insights that are preventing the crisis from being seen. But all we need is something to unfold, for something to stop. And now we have ourselves a big problem. In addition to that, they included this chart here. Remaining recipients of unemployment benefits, especially of extended benefits, disproportionately work in low-wage sectors like food services. We already knew that, but this is just highlighting that. On the left-hand side, you're seeing lower average wage. On the right-hand side, you're seeing higher average wage. And of course, the very left is accommodation and food services. You look at that, just showing you the percentage of the emergency unemployment compensation, extended benefits, and regular state unemployment, and so on. It goes through it. But these numbers here for that one is 25%. 25% in that case. So I just wanted to show you the fact that you've got a lot of people that are still affected by this today. And a lot of these restaurants, a lot of the hospitality industry, they are working on a limited schedule. They are working, some areas are only outdoor dining still. So you don't necessarily, if you've got 4 tables or 6 tables, how many people can you really be serving? Better than nothing, maybe, but this is just showing you that this is a real big factor. They break it down here. If you want to know more, you got to check it out. But essentially, that's the key, okay? The second thing here about September is inflation. This is an article I'm just using as a prop. The summer of inflation. Will central banks and investors hold their nerve? Essentially, what we've been told is that over the summer period, inflation is going to run hot. We know that already. But once it's over, then we are going to see a slowdown. Is that going to happen? I don't know. You've got the crystal ball. You let me know. But what I can tell you here is that September is a pivotal point in time for 2021. These are the 2 primary reasons. And then, of course, we're going to get the Fed meeting. That's kind of the bonus third reason. We're going to get the Fed meeting. What are they going to talk about? Are they going to maybe suggest that a taper is coming at the end of the year? Many expect that. We will see what happens. Now, talking about inflation. Oil prices surge as OPEC weighs rising demand in rich countries. Actually, by the time you're watching this video, they may have already agreed to something. So we'll see. Essentially, if there's an increase in prices, it's going too high, then of course you're going to want to see more pumping to push that down. This is the manufacturing PMI, something else that I've been touching on. Looking at this, It's at 60.6%. Okay, this is specifically the ISM. I showed you every different one, you know, the PPIs and the all these different reports that have basically come out. And you're looking at, as they mentioned here, raw material inventories growing. So I want to see that these things are actually being used, that imports and exports are taking place at a good pace. I want to not see the, let's say all the container ships that are basically stuck waiting to get through the ports. I want to know that this stuff is moving through, and that's when we get a sign that things are starting to ease. Okay, you can't necessarily just look at prices or inflation. All these indicators might be skewed simply because of disruptions and all these other things that are happening. Okay, we're going to get a much more clear picture in the next few months, I do believe. So crude oil right now, it's sitting at about $75 a barrel. You can see on the right-hand side, basically a lot of green in there. And the one that's down, interestingly, is steel. As I said in the previous video, or the one before that, you're looking at lumber that had come up like crazy. However, steel had started to turn, and the suggestion was that maybe steel is going to end up looking a lot like lumber, at least in the short term. We'll see. Gasoline, this is just giving you an idea over the past, I believe this is the year chart, but we're looking at it. This is the year right here. It has been going up since November in a straight line. These are the futures, but I'm sure that affects you at the pump as well. This is the ISM PMI, just to show you over the last 5 years, I believe this was, to give you an idea of how low this dipped down. Anything below 50, which is this line where the mouse is moving here, anything below that is a contraction. So we already, what I want to note here is that at this point here, 2018, when the central banks started to print less money and you saw the global balance sheets declining, the ISM came down with it before 2020. This is what I'm trying to highlight. But unfortunately, very few people watch this video and they don't realize that before 20, there was already big structural problems. Now look at this. This is the droughts, right? If you go down here, it's just going to show you some information through the Wall Street Journal. During a relatively mild summer last year, 19% of the continental US was in a drought at the start of June. 19%. By December, extreme and exceptional drought had begun to spread in the West. And by June this year, several Western states were engulfed in extreme or exceptional drought. And I think this is important because the title at the bottom here, they're showing drought's toll on U.S. agriculture points to even higher food prices. Even higher prices. I told you about this. I think it's very important. We need to pay attention to it and why this is really key, because obviously it affects you and your wallet. GPS Insights time number 1, September is the pivotal month for both the stocks and the economy, and I want you to keep a very close eye around that time frame. Number 2, inflation data needs to soften, or you are going to see increased risks right here at this moment. Number 3, moratoriums, as well as the rent crisis and everything connected in with that needs to start to slow down, or else you have got an issue come September. This is going to be really key to watch. It's a pivotal moment, and you look at everything that's been put in place to stop the crisis from being visible. I think that this is going to show us what this is really made of come September timeframe. If you want the truth, then you've got to get on the insiders. This is where I can communicate to you directly. This right now is set up so that 5 days a week, I email you the video of the day. They are censoring, they are banning, shadow banning. They are doing everything that they can to prevent creators like myself from getting to you. And that's why I set up the insiders. It's a list, email list. You sign up, you get the video 5 times a week. In the coming weeks, it's going to include original information, okay, in addition to the video of the day. Okay, so I'm going to build this out into an actual proper newsletter. I'm just, trying to do this slowly, piece by piece, so it actually gets put into place. So you could sign up. I'll put a card at the top. It's basically themoneygps.com. It asks for your email, put it in there and get on that. I think it goes without saying, but you've got the hotel industry that has been suffering over the last year plus. New York City hotel industry in a depression. And I think that word is actually accurate when you see what's been happening. I mean, my goodness, all over the world, really, today. Room revenue down 60%, okay? And you see an industry trade group saying that New York City has lost a third of its hotel rooms, and average revenue in the rest is down more than $150 a room. So you see this affecting a lot of jobs, and there's so many other things that are connected with it as well. Okay, there are a lot of businesses that rely on these hotels to be there. You've got the restaurants there. You've got little shops that are around. Maybe there's something in the lobby that's there. You've got other things connected with tourism as well. There's so much, a lot of business that's not directly working for the hotels. Going down, U.S. Treasury's cash balance expected to fall by hundreds of billions of dollars. We knew this already. This had been taking place, and you could see that has declined over this period. And as I told you, it wasn't a surprise that this would act as basically stimulus, okay? Because that money moves its way through the markets. And you're seeing a time in which, with the reverse repo operations that are taking place today, there's some real wacky things that are going on in this system right now. The financial system looking very weak, and it is reliant on such an increase, not just continuing, but an increase in the amount of stimulus from all different forms possible. So even the suggestion of a taper is extremely worrisome. Now, this right here is Leon Cooperman, and he made a good point, okay? He's called himself a fully invested bear. In terms of my long-term outlook, to be honest with you, stocks are the best place to be, but I just wouldn't expect much from the major averages. I'm prepared to be that kind of environment where I have to stock pick my way to success. The cyclical forces that determine the market outlook are basically positively positioned, and that's why I'm heavily invested. We have a central bank that wants more inflation. Until that changes, I think the market is probably in good shape. So that's really important. Okay, and he also said this: I have a strong feeling that the cycle we are going through won't end well, but I have no idea where it ends. So you see what he's saying here. He sees the light at the end of the tunnel, or maybe the darkness at the end of the tunnel. But in this moment here, to himself, he's thinking, I got to be invested in order to continue to bring in the capital, to bring in the funds, to increase the portfolio. But I'm watching out. I'm cautious. Okay, that's what he's saying. Wanted to bring that to you. I think a lot of individuals are in that position right now. If you found the video informative, hit that thumbs up button. All you got to do, click that button, and you support this channel. Don't forget to sign up for the insiders as well. I'm also on Instagram. I'm on Twitter. I'm on Facebook. I'm on LinkedIn. I'm on all platforms now. Okay, every single platform you could think of, search for The Money GPS and you will find me there. I got original content going on every single day. If you haven't seen this video already, you definitely want to click on it, check it out, and I'll see you there.